Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for May 8th, 2018. Yesterday, overall, the bulls had a really good day. We saw everything push higher, but we left behind some considerable uncertainty. First, let's take a look at the diamonds here. You can see the diamonds pushed up, and we challenged this uptrend line. Or downtrend line, I should say. Challenge that downtrend line. But the more critical thing is we ended up testing that 50-day moving average almost to the penny, but was unable to hang on to it. And we pushed back down, leaving behind kind of an uncertain doji candle pattern here. Now, that can be perfectly fine if this turns out to just be a little bit of a rest right below the 50-day moving average. But if it turns out to be the beginning of a failure pattern, that would be a major problem for us. And what I mean by failure pattern, a follow-through candle to the downside that eclipses more than 50% of this upside candle would certainly be an evening star type pattern. And that could create a problem. Now, if we have just a little bit of a pullback in here, just a little hold in here, that's really not a big deal. A little consolidation underneath the 50, not a major issue for concern. We just don't want to see those bears kind of come back in and be emboldened to take over, because another failure here at the 50-day moving average could easily set up a failure back down below and a new low in the market. Failure here could easily break that 200 and drop us on down. So we don't want to see that happen. We want to see those bulls hang on and take a look. I don't want to predict one way or the other. I'm leaning toward, because of the nice holding pattern here, I'm leaning toward the side of the bulls, but I got to tell you, we've got about a 50-50 chance to go either direction, and so we're going to have to be a little bit cautious here and watch closely on that price action. As you can see this morning, the futures are pushing us just slightly lower this morning. We have a lot of earnings coming out yet. We still have a considerable number of earnings, over 400 companies reporting today, and they're coming in pretty fast and furious. It's possible some of those earnings could also pick us back up and move us higher here. So watch that pretty closely. There's not much on the economic calendar today to move us around. We have really only one potential market moving report, and it's one of those that doesn't move us around that much normally. This is the jobs opening report, and they, according to consensus, they're expecting just a little tiny improvement today in that number, showing that demand for labor is very, very strong. There's more demand than there are people to fill the positions. That's generally a good thing for the economy. So holding on right there, we want to see those bulls defend in this area. If we take a quick look at the SPY did virtually the exact same thing. It actually breached that 50-day moving average temporarily, pulling back, leaving that uncertain candle right there, just kind of hanging us up, making us kind of wonder, what happens next? Let's take a look at the Qs. Qs followed through that nice bullish move up. Qs being one of the strongest of the indexes, pushing higher, holding above that 50-day moving average. But we do have a bit of a resistance challenge right here, and that's right there at that past high. We tried to push up through there yesterday and just weren't quite able to have enough energy to do that. And now this morning we're showing a little bit of bearishness, maybe opening up in the gap from yesterday and the possibility of filling that gap. So be careful and watch that. IWM also above that 50-day moving average, but it did something also very nice. It broke this little downtrend and held above that, held above this pretty major area of price support. So looking better here on IWM, and still kind of serving as the strongest of the indexes at the moment, holding this nice upward trend. Been very choppy, but at least it's hanging in there and holding up. So the question is, with two indexes above the 50, two indexes below, and showing us uncertain candle patterns, what do we do today? Boy, I got to tell you, I'm going to exercise some caution today. This could easily flip one way or the other. I'm going to stay very, very focused to price action, because it's only in that price action we're going to get that early warning or that cue as to where the market might go from here. We're in a really important battleground. Bulls and bears will be locked in this battle right here, and we need some assurances those bulls are going to hold on. Now, one thing I would say is, if we can hold on in here, a little bit of rest or consolidation right in here would be perfectly acceptable. Just a little bit of a break in here, and then we see those bulls pop in and push us higher. That would be awesome. The last thing we want to see, though, is that full-on failure at this point. Let's take a quick look at the VIX. The VIX moving slightly lower yesterday. Here again, not low enough, not a big push lower to really give us a whole lot of confidence that the fear has dropped out of the market. There's still that uncertainty kind of swirling around us. It would be really nice to see this pull all the way back into the 200 and then actually fail that 200. We'll have to wait and see on that, because we could certainly go the other direction here today. Let's take a look at T21.22. T21.22, that 4-week new high, new low ratio. You can see we pushed up here toward that upper area. This is that bearish reversal zone. When T21.22 makes it up in here, we normally get some kind of a pullback. Doesn't mean any kind of a crash, but some kind of a pullback. And you can see we still have more room to the upside. So we still could push higher if those bulls step up and really defend this area. So there's room up here to move a little bit higher. We'll have to keep an eye on that pretty closely. Of course, any kind of a pullback can move us back here down toward the middle of this range, again giving us that little bit of an uncertainty which direction we're going to go from there. So come on, bulls, let's push. Let's see those upside moves, right? Let's take a quick look at what's really moving this market around. Is Apple pushed up nicely following through yesterday, but there again, there's that doji pattern, that doggone, well, and this is actually a shooting star pattern, or even a gravestone doji pattern, gap away to a gravestone, which suggesting Apple could pull back today. Now, with Apple being such a major driver for the market, that could certainly affect how the Dow, the SPY, and the NASDAQ performed today. So kind of keep a close eye on that. Apple seems to be really important to the market right now, having reached those new highs. So let's be a little bit cautious today, be a little bit careful how you approach today. Make sure you have a plan. For those of you that are holding current profits, make sure you have a plan to protect those. The last thing we want to do, one of the worst things we can do as traders, is allow a winning trade to turn into a losing trade. So make sure you're prepared for that if the market does start heading south, and if those bears take over. All right, everyone, I want to wish you all a fantastic day. If this is the first time you've seen this information, please do me a favor. Click on that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons. I really appreciate that a ton. That helps the algorithm show my videos to more people, and I do appreciate that. Feel free to drop a comment if you think it's worthy, and also feel free to share this video with any friends and family that you might think could benefit from this information. Everyone, take care. Have an awesome day. I wish you all great profits. We'll talk to you all very soon, bright and early Wednesday morning. Take care.